Welcome to This Explainer. Look, chances are you've probably used ChatGPT at least once this week, right? But today we're diving straight into the dizzying financial paradox of the company behind it. We are looking at an organization that is fundamentally reshaping how we work and live, yet its underlying economics might just make it the most expensive gamble Silicon Valley has ever seen.
So let's start with the rocket ship. In 2025, OpenAI raked in a staggering $13.1 billion in revenue. To put that massive number into perspective, they hit a $12 billion annualized revenue run rate by July of that year. That's a milestone that took Google 7 whole years and Facebook 6 to hit. And by the end of 2025, they were knocking on the door of a $20 billion run rate. I mean, it sounds like an absolutely unstoppable, historic success story. But, a rocket this massive requires an unprecedented amount of fuel. The audited net loss for that very same year? $38.5 billion. Yeah, you heard that correctly, $38.5 billion. For a company breaking literally every revenue growth speed record out there, it is bleeding capital at a scale that just completely defies traditional corporate gravity.
Let's move right into Section 1, the billion-dollar burn rate.
How exactly does a company growing this incredibly fast hemorrhage money at such a historical scale? Well, the losses didn't just grow, they multiplied by nearly 8 times in a single year. Back in 2024, they lost a heavy but, maybe manageable $5.09 billion. But then in 2025, as they officially transitioned from a nonprofit to a for-profit entity, which incurred these massive costs related to convertible interest and warrant liabilities, that net loss just absolutely ballooned to $38.5 billion.
And when we take a peek at the 2025 ledger, it reveals the brutal structural realities of the AI business. Even with that $13.07 billion in revenue, research and development costs alone hit an astronomical $19.18 billion. Add in the cost of revenue at another $7.5 billion. So the really crucial takeaway here is that just to invent and train the next generation of models, OpenAI actually spent over $6 billion more than their entire record-breaking revenue for the year.
Which brings us to Section 2. The staggering cost of compute. Because here's the thing, AI doesn't run on pure software ingenuity, it runs on physical infrastructure. And the scale of this infrastructure is just mind-blowing. We're talking about OpenAI committing $250 billion to Microsoft Azure through 2030, $350 billion to Broadcom for custom AI accelerators, another $90 billion for AMD GPUs, and $38 billion to AWS. By their own internal estimates, they are targeting $600 billion in total compute spending by 2030. They aren't just writing code here. They're essentially financing a brand new, incredibly energy-hungry civilization that eats up electricity on the scale of mid-sized cities.
And there's this fascinating, almost paradoxical circularity to this financial fuel. A huge chunk of the money OpenAI raises from tech giants goes, directly back to them. In 2025 alone, OpenAI paid Microsoft $17.2 billion, mostly for model training and cloud services. It creates this wild dynamic where investors are essentially funding their own future cloud revenues right through OpenAI's burn rate.
Okay, let's pivot to Section 3, DeepSeek and the price war. As OpenAI frantically scales up to secure its lead, international competition is shifting the entire industry's economics. The new battleground right now is what we call agentic automation. And this isn't just about having an AI write a cute poem or answer some trivia. We're talking about models optimized to autonomously execute multi-step workflows, handle complex coding, and make real business decisions. This is the highly lucrative enterprise market that all the major AI labs are fighting tooth and nail to dominate right now, because honestly, this is where the massive revenue promises actually live.
But a massive threat materialized out of nowhere in July 2026 when the Chinese lab DeepSeek completely disrupted the pricing floor. So OpenAI had literally just implemented a huge 80% price reduction for its GPT 5.6 Luna model, bringing it down to $1.20 per million output tokens. Well, just 2 days later, DeepSeek dropped their V4 Flash model and priced output at just 28 cents per million tokens. I mean, they undercut OpenAI's already heavily reduced price by over 75%. It's wild.
But listen, the existential threat to OpenAI isn't just the cheap price tag, it's the capability. DeepSeek's V4 Flash actually scores a 50 on the intelligence index, which puts it practically neck and neck with Luna's 51. So if you're an enterprise buyer, why on earth would you pay a premium? This totally destroys the premise that you absolutely must spend tens of billions of dollars to guarantee a competitive moat. If frontier AI just becomes a cheap commodity, How does OpenAI ever pay off that $600 billion infrastructure bill?
Which leads us perfectly into Section 4, the fundraising flywheel. Because to survive this brutal price war, the fundraising flywheel literally cannot stop spinning. For instance, SoftBank Group just committed another $30 billion to OpenAI via their Vision Fund 2. They're spacing this out in 3 massive $10 billion tranches across April, July, and October of 2026. This immense influx of capital is helping to value OpenAI at a jaw-dropping $730 billion pre-money valuation.
But here's the kicker. Even $30 billion isn't enough. Reports are showing OpenAI is currently out there pursuing up to $100 billion in total new funding, heavily targeting sovereign wealth funds at a potential $830 billion valuation. And why? Well, because their own internal projections estimate they're going to suffer $115 billion in cumulative negative cash flow all the way through 2029. They are raising money like a literal nation-state just to survive until they can, theoretically, reach profitability sometime in the 2030s.
So this all brings us to what might be the defining business question of our era. Can you actually outspend your way to a moat? Is sheer scale alone enough to protect you when highly capable competitors are offering the exact same service for pennies on the dollar? This is really the ultimate test of OpenAI's entire corporate strategy.
Let's dive into our final section, Section 5, the path to profitability. So what exactly has to go right for this math to actually work? It is a very delicate balancing act. The bull case relies heavily on agentic AI successfully taking over high-value human labor, which would justify that premium enterprise pricing and hopefully drive revenue past $100 billion by 2029. But then there's the bear case. Open-weight and highly efficient models commoditize AI entirely, which would collapse profit margins to near zero. And if you look at the metrics, there are definitely some warning signs. Honestly, you might have even noticed yourself reaching for other AI tools lately. ChatGPT's global web traffic share fell from 86.7% to 64.5% in just 12 months, as it steadily gets chipped away by competitors like Google, Gemini, and Anthropic.
Furthermore, there is a deep, structural, scientific risk at play here. Leading AI scientists, including OpenAI's very own former chief scientist Ilya Sutskever, are warning that the current large language model architecture might have already hit a wall. As Ilya himself warned, we may have actually achieved peak data. If the internet's text is essentially exhausted, just blindly throwing more compute and more billions at the current models might start yielding seriously diminishing returns.
So, we're going to leave you with this final multi-billion-dollar question. OpenAI has committed hundreds of billions of dollars to massive data centers, specialized chips, and energy grids that are optimized entirely for today's large language models. But what if the next massive leap in artificial intelligence requires a completely different approach? If the paradigm shifts away from brute force LLMs, could OpenAI's $600 billion infrastructure build become the most expensive stranded asset in human history? The race is on, the billions are burning, and the outcome will absolutely define the next century of technology. Thanks for